Okay, good. Works well in SP&P 500. Let's see Tesla. Oh, 49%. Oof, this is great. Absolutely wonderful. Welcome back to Trading Concepts Simplified. In our last video, we talked about the MACD and we wrote a simple strategy where we could set our entry and probably stop loss using the MACD, and we talked a lot about MACD as a concept. After the video, I thought about something. What about if we enter just based on the MACD crossover only? So I wrote a script for that, and here we are. We've got this absolutely wonderful trade, and the max drawdown is very, very low as compared to the net profit. But we have a lot of trades, 265 trades. It's a lot of trades. We have to pay a lot of trading fees because there are lots of trades. So let's say we don't consider the trading fees. This is going to be a good trade, and we only use the MACD. This is the rule. You enter when the histogram shows green, then you exit when it crosses to the red zone. If you don't check the histogram, you can check just the signal line and the MACD line. So when the blue line crosses below the red line, you buy. You can see it over here, and you sell when the blue crosses below the blue. And we can see that there will be a lot of time where it is going to be choppy. This is the strategy. As usual, this cannot be your strategy. You have to use it with other strategies and other confirmations and whatever, and we will be moving straight to the code. We're going to be using gold in the 30 minutes time frame. We will change it later on, but let's start with this. So we're going to be creating a new strategy. Create new strategy. Yes, we're going to call it the MACD internal cross from Trading Crops Simplified. Then we're going to just apply some of the input parameters for MACD. I'm going to expand this a bit so it's much clearer. The fast length and the slow length and the signal length, they are all from the MACD. They are all needed for the MACD. And the moving averages, I think if you saw the previous tutorial, you will see this. So let's create some variables for the SMA. So these are for the MACD, these are for the SMAs. I prefer using the 20 and the 200 SMAs. So let's calculate the SMAs, and it's simple, TA.SMA. And we're going to use the MACD function here that we used exactly in the previous lesson. We want to have two functions to check if the bullish MACD histogram has changed or it has changed in the bearish direction. So I'm going to find MACD here, add it to the chart, and you can see immediately in the histogram that it changes from red to green and green to red, and just that. So that is what I mean by the histogram changes bullish or bearish. So if it's green, it's a bullish change. If it's red, it's a bearish change. All right. So I just write the condition to do that, to check for the histogram line. The east line of 1 means that if you are here, you are checking the previous. Right. So if you are here, we check the previous. The previous is the previous bar is the east line of index 1, and the east line here could be east line of 0, which means the current bar. So you can put 0, or you can just remove it. It's the same thing. So if it's greater than 0, so we say it is bullish, and so which means that if we get to this bar and we check the previous bar, which is this, it is red and it is lower than 0, and the current bar is greater than 0. So this means there's a bullish MACD East change, right? And that's it. And it's also true for the opposite, which means you were in green before and you changed to red. So that is the simple function. And we want to say that the buy signal is when there's this change, and the sell signal is when there's this change. After that, we want to plot our SMAs. I think we should be used to this right by now. Then we'll also want to plot our buy and sell signals. Great. Our condition for longs is that, okay, let's remove this. So we want to say that if the long condition is if the buy signal, with this buy signal, and you take a buy trade, which is just if a toggle, that's okay, I want to take buy trade, you toggle it on and you take buy trade, and then you want to enter the long, right? And you close the trade when there's a sell signal, right? So you enter when you're going for long. Then when you get to this signal, which is the sell signal, you close your trade. So simply you can say if sell signal, right, which is here, here, when it is sell, then you close. And that simply is all the strategy. So let's add this to chart. Yeah, it's as simple as that. You get 33.23% profitability, and these, 449. This is because we are using one contract. So let's say you have 100,000 to trade, and you're trading 10%, 10% of the equity. Then you can see it's the difference. You can see 100%, 2.09%, and a 0.39% max drawdown. And that really is simply it. Now, we did not use a lot of these filters, so we could just probably remove them. I think I used them for something else, but I can just remove all these filters. And we have something very clean and short. And this is exactly what you need to do. But we are taking only the long trades. So let's see what happens if we take the sell signals. We say sell signal, if sell signal, then if it is long signal, okay, where are the, the buy signal, you close other strategies. So this reverses everything, right? So we will take sell signals only. I'm pretty sure it's going to be bad, but let's see. Okay, it's not very bad, but it's way lower. It's 73% profitable. My. Yes, but you can see it went up a lot, came down, then started going up. But let's check. So we are back to this, right? So let's move this to 100,000. Then equity 10%. Let's see, 55%. 55%. 55 USD, and the max drawdown is 128. So this is a terrible thing to have this amount of max drawdown. So we went up to 100, came down. Yeah, this is a terrible trade. So we could go back to the long signals. buy signals, and I think that's much better. So in a trending market like gold or something where market goes into in long position for more, then it's better to just go with only buys and not sells. So we can do this again. 100,000, I guess. Then 10%. Yeah, something like this. So the MACD here is the MACD of 12 and 26. So we can actually change it to 20 and 200. So it aligns with what we have in our code. Our code says the fast and the slow for MACD is 20 and 200. So which is also what we have here in this MACD indicator. So we can also verify. We can see that we are buying here, right? When it changes from red to green, we buy exactly in this candle. This is the line here. And we sell where? We sell where the green changes to red, which is here. So from here to here, not terrible. The same thing, right? This is just today. You entered when the red turned to green, and we are still in trade till now, right? So, and this is a good profit, right? So this is pretty much it. And like I mentioned earlier, you should not take this kind of indicator and just use it as a strategy. You have to have a lots of trades that are nothing, right? Just start and close immediately, and you spend a lot of money in trading fees. This is why I have these kind of indicators. Go back to the Pine script. Let's go to here and yeah, put some filters. So let's see what happens if we change time frame. So example is use 1 hour, 1.80. Yeah, not very good. We have 1.09 drawdown and 1.80 profit. It's not very good. What about 4 hours? Okay, we have 1.74 drawdown, 4.20 net profit. Not bad. And what about 15 minutes? Oh, okay, this is terrible. 5 minutes. Oh, not good. So the sweet spot is around 30 minutes and above, which completely makes sense. And let's try it for something else like S&P 500. Let's see, S&P 500. Yeah, we've got 2.24 net profit and 0.85 max drawdown for 30 minutes. What about in 1 hour? Okay, 4.23, 1.33. Okay, good. Works well in S&P 500. Let's see Tesla. 49%. Oof, this is great. Absolutely wonderful. What about for the 30 minutes? Not bad, but we have a lot of drawdowns, but the profit is also very good. What about 15 minutes? Okay, 5.9, 0.12. Not very good, but still something. What about 5 minutes? Wow. So you can see this is just Tesla, right? Let's check another. Let's go for Bitcoin. Crypto, use the Binance one. Oh, look at this. 2.26 profit, max drawdown 0.68. Let's check the 30 minutes, 4.07, and the 1.45 max drawdown. What about 1 hour? 12.21, right? So we've tested this on a stock, we've tested it on an indices, we've tested it on a metal, we've tested it on crypto. So let's test it on Forex. Go to Forex. I don't know, GP USD. Let's use this. Oh, feels terribly. 30 minutes. Oh, feels terribly. 1 hour feels terribly. So I'm assuming Forex is not a very trendy market. So what about the Euro USD? Maybe that's better. No, not better. 30 minutes. Yeah, absolutely terrible. So it does not work well in Euro USD, in Forex. Let's see USD JPY. Ooh, okay. Not bad. For JPY. What about the 1 hour? Okay, still good. What else? 5 minutes. Okay, terrible. So the point here is that it works well for many markets. The crypto, the stock, the metal, but Forex, it doesn't really work. And be mindful of this. This is a lot of trades, and you pay a lot in trading fees. So you have to filter it down to where you avoid trading all those low volume trades. You have to just avoid that, and that is what I try to do with all these filters. And I'm going to work more on them to filter as much as possible with the low momentums and low volume, filter them out and just take the high volume, high momentum trades. That is it for this video. And please give the video a thumbs up, a like, and a shout out, and what you want me to add to this, maybe a filter that you think is going to help. Just let me know, or just let me know. Just put down what you want in the comment section, and I'm going to read them, respond to them, and if there's any action points, I'm going to do it one of my next videos. Thank you very much, and see you in my next video.